Welcome back. You're here with us on NDTV Profit. Talking about banks in particular, they have been really leading the rally. In fact, the kind of up move that we saw into the markets a couple of days ago. Today also, there was some bit of volatility yesterday post the RBI policy, but now Bank Nifty is flat but managing to be in the green, at least for the moment, though it has come off from that highest point of the day. Vaibhav Agarwal, banking analyst at Angel Broking, is now joining us to take us through what is it that we should really look forward to as far as banking stocks are concerned. Thank you very much, Vaibhav, for being with us here on NDTV Profit. Good to have you on the show today. What do you have to say at this point in time with so much that has happened as far as the public sector banks are concerned? So much was expected from the government side. Now there is a recapitalization plan for 4 years, and for this year as well, the government has asked for additional amount as far as bank recap is concerned. So do you think now once again, public sector banks have become more attractive?
Well, the recap that the government has come up with is just one small part of, the various problems that were affecting PSU banks. Definitely the amount of 25,000 crores is a good amount for this year. Our own estimate was that, the PSU banks are short by about 35,000 crores. So this number is, pretty close. So it's a good number to begin with. But, it does not address the core issues, relating to asset quality, and also, in terms of the way the asset appraisal and, how exactly further NPAs are to come up, and whether, a lot of this capital may end up getting used up for just providing for the existing NPAs and, the new NPAs from restructured loans, etc. So, a lot of the problems for PSU banks are still not, over. And ultimately, the key issue is that some of the biggest exposures that they have is to sectors like power and metal, and those sectors itself are not out of their stress. Until that happens, it's very difficult to really, come up with a view that, okay, PSU banks now for the next 2 years are expected to do, quite well.
So at the current levels, we have seen at least some bit of a recovery that came back into public sector banks in particular. Many of the names have recovered from the lows that was there earlier. Do you think now they are at least looking attractive, say for, from the near term perspective? And if yes, then which stocks do you think really hold value at this point in time?
In our view, most of the positives that have come out in terms of the recap, etc., those are already more or less built into the price, and we believe that this rally could, run out of steam, at slightly, maybe, at these levels or slightly higher levels from here. Ultimately, the basic point is that, sure, these banks are trading anywhere between 0.5 to 0.7 time price to book. So one might say on valuations, they are cheap. But, that is just picking between a value between 0.5, 0.7, 0.8. There is still not enough visibility to go ahead and say that these banks will become profitable over the next year or so, and that their return on equities will be well above their cost of equity. Till that confidence comes in, fundamentally it's difficult to really give a buy on these stocks. More or less we would remain neutral on most of these stocks, except SBI, which, to us within the PSU pack is still, a decent stock to look at. But otherwise, we will still wait and watch for the stress sectors itself, some visibility of improvement before becoming all out positive on PSU banks.
So SBI is one of the the public sector banks that you probably like at this point in time. So one should really stay away from it. Is that what you're saying? And what's your view on the top 6 banks that the government has also chosen in terms of recapitalization? Remember, they've said that there'll be the recapitalization will be happening in 3 tranches, and in the second one, the top 6 have been chosen. So do you see value in any other names apart from SBI?
Well, the other stock that has done well recently is Bank of Baroda, but in our view, the stock is now trading at quite a large premium to the other larger PSU banks like PNB, etc., more than a 25% premium. So we believe, at this point, we are neutral on Bank of Baroda. We feel valuations are factoring in, whatever little positives differentiated from, let's say, PNB. And at the end of the day, that stock also has exposure to, quite a large exposure to the metal sector. Apart from that, also again on the larger side, PNB, Kandra, these 2 banks are, we would continue to monitor for if things are looking to improve across all fronts, including asset quality. Those would probably be these stocks that we would look at. But some of the ones which have seen a rally recently, like Bank of Baroda and Union Bank, we remain neutral on them.
Just an observation, Vaibhav, in the fourth quarter of FY15, we saw a very sharp reaction from the street, only considering the asset quality in these banks. And in this quarter, Q1, we did see asset quality deteriorating even further, but still the stocks were being given a good reaction from the street. Any particular reason for that? I mean, what is it that street has really liked about the public sector banks' results this time? Because the results have not really, been very good even in the first quarter.
Well, like you pointed out, that asset quality has actually deteriorated even in this quarter. On a QOQ basis, net NPAs have also gone up by 30 basis points for the PSU banks which have declared results. While for private sector banks, the net NPA ratio are still maintained on a QOQ basis. But the fourth quarter numbers were so extremely bad that after that, many of these stocks got battered almost 35 to 40. Some of them got battered almost 48 to 50% from their Jan peak levels. And and after that, if you take the case of some of these banks like PNB, BOB as well, they have declared results which are minus 50% degrowth in their profits. But those numbers were better than expectations. So expectations were so badly beaten down that even a slightly better number on the profits and not too much of a deterioration on asset quality has resulted in some bounce back after corrections of almost 30 to 40% after fourth quarter numbers.
Right, and before I talk about the private sector banks, just a quick word on Kandra Bank. If you track that one particularly, it's likely to come out with its numbers today. Anything specific that you're looking forward to?
Well, Kandra Bank, within the PSU pack has sort of delivered a relatively steady kind of an earnings run rate in the last 2 or 3 quarters at about that 650 crore level. We expect a similar level this quarter as well. On the slippages, net slippages as well, we expect around 1500 odd crores, similar to the run rate they've been doing. The bank can benefit from the decline in deposit cost that we are seeing, because it is within the larger PSU banks one of the most reliant on fixed deposits and bulk deposits, and has a lesser CASA ratio. So that stock, like I had mentioned earlier as well, is one of the stocks on our radar. If numbers continue to give some comfort, that may be a stock to look for. Although at present we are neutral, but that is on our watch list, for an upgrade.
Right, and let's now also talk about the private sector banks. What do you really like at this point in time? Any top picks that you have?
So we remain quite positive on the private sector banks. Clearly they are in a sweet spot. As the economy revives, they are the ones who have the capital and who have the profitability to gain market share quite significantly over the next 2-3 years. Earnings visibility of at least about 18 to 20% earnings growth is there. They continue to maintain their net NPA ratios more or less on a very flattish kind of a trend quarter after quarter, because whatever NPS they are seeing, they are easily able to provide for it from their profitability itself. So on all fronts they're looking quite positive. Even in terms of valuations, most of them are trading at close to their average levels. They've not yet gone towards the higher end of their valuation band. So we remain positive on stocks like Axis, ICICI, and Yes Bank. Even in fact HDFC Bank recently has underperformed a little bit, and even that stock for us is now a buy. So across almost all the private sector banks, we have a buy rating at present.
And what's your view on Kotak in particular? Because even that was in news, and there were a lot of movement that we saw around that particular stock as well.
I'm sorry, we don't track that stock.
Okay, and so ICICI, Axis, and one more name you mentioned, HDFC, is something that you like as far as the private sector bank goes. Now, we also understand many of these banks have got high exposure to infra in particular. Do you see that, going forward may cause some bit of a trouble, because there hasn't really been any recovery out there?
Well, like the governor also mentioned yesterday, power and metal remain the key stress sectors. Even in other infra sectors like construction, there may be some NPS coming up, but there is visibility of improvement, like in roads and other infrastructure sectors. The government tendering recently in terms of EPC tendering has been so strong that there is some visibility that over a 1 to 2 year period, a lot of those companies would slowly be able to emerge from the stress. Power sector, of course, there remain issues in terms of the offtake from the state electricity boards, that has to be addressed by the government. But the positive is that on the coal front, things are improving. If those trends continue, slowly power sector issues may start to get addressed. Ultimately, it's a domestic sector, and the latent demand is there. So as the economy revives, there is some visibility. But as far as the metal sector is concerned, that is ultimately a global sector, and all the cues point towards further stress. In fact, in the last 3 to 6 months, things have become worse in the global commodities, and so there we don't really see much of a scope for revival, and there could be further slippages and a lot of stress for banks yet to come from their exposures in the metal sector.
All right, Vaibhav, we'll leave it there. Thank you very much for joining us here on NDTV Profit and giving us your views on the banking space in particular. We're slipping into a quick break at this point in time. Don't go anywhere. We'll get you the management of Britannia when we return.